around the world. This is FXPassion, broadcasting you live on YouTube, and this is Forex Trading Course 101. And bringing all together lesson 14. Remember everybody, we are trying to build the three pillars. Number one, the strategy and or system, which the basic module and the beginner module and the intermediate module are part of, and advanced. Then we're trying to understand risk management, how risk management works, and then the big one, the psychology part. Okay, so, and remember, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. Let me see if everything is okay. Just give me a second, everybody. Passion, I cannot hear you. Okay, just give me a second. Let me see maybe we have problems with internet today. Just give me a second. Okay, everybody, I cannot see the questions or the answer. Okay, so we are going to do the webinar like this. Hopefully you can see me and hear me. Okay, so 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks and or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. That being said, let's dive together into the charts. Okay, and we are going to bring everything together. So yesterday it was AUD USD, right? AUD USD. So we are going to, let me check here, just a second. Miguel, hello, Akos, time to shine, hello all, Santano, how are you? Giuseppe, come stai? Mochtaba, my friend, long time no see. AUD USD, how are you? It's been what, a decade? How are you? I hope you are well. Salbakti, hello, sound is okay for me. Hello Annie, everyone, yes, I see and hear you okay. How are you, Mochtaba? What was a decade? You know? So AUD USD, AUD USD, AUD USD, and AUD USD. Bring it all together, everybody. Monthly chart, left up corner, weekly chart, left down corner, daily chart, right up corner, and the 2-hour chart is just an example. Okay, so first the monthly chart, let's go. Okay, we have the upper band and it's here. So today we are going to do a complete analysis, everybody, okay, on how should you analyze a currency pair with all the knowledge that we have until now. Right, and we said that sometimes, unfortunately, JForex is missing data. So we are going to check with TradingView, www.tradingview.com. Charts. We want to make sure if our bands are okay. Hello VA, how are you? Okay, so AUD USD. AUD USD monthly chart, and let's compress the chart, right? Let's compress the chart. Okay, so the upper band is okay on JForex, so horizontal line. The upper band is okay, it's 1100. This is 1107. it's more or less, everybody, okay? Don't bother with to the pip. So it's 110, and on the trading view is 110. Okay, now the lower band is going to be different. So the lower band is somewhere at 0.479. 0.479. So clone 0.479 something. Okay, now those are the two bands, everybody, for AUD USD monthly chart. Okay, now what is the bias? The long-term bias is still down, right? See, if you don't check trading view, you would think that, oh, the market hit the lower band here and that the long-term bias is up. That would be a mistake, and this is why in here the market pushed further down. Long time short, yes, we are still short long term. Yes, sir, the market should. And remember, everybody, the market can do anything it wants, but if the market is going to continue its path and wave and the Fibonacci's and structure and everything, so it must wave down until this level. Okay? On the other side, remember that before the market hits the lower level, it can do anything it wants. You know, it can retest, go up and down, but this doesn't change the thing that the long-term bias, okay, the long-term bias is still down. Yes, I had that mistake on Dukascopy. Akos, check all the currency pairs that you have. Okay, and one more thing, everybody, when you check, so ad block, okay, when you check AUD USD and other currency pairs like Euro, CAD, whatever, don't go with ICE. Don't go with ICE. Okay, go with, if you want to check Saxo, checks FXCM, checks Forex.com, and you are going to see where the 3 or 4 brokers have the same upper band and the lower band. Don't use ICE, everybody, or ITS, I don't know how to pronounce this. Okay, so let's go back on the chart. Okay, so bringing all together, long-term bias is down. Okay, so what is the market doing right now? Well, we learned about structure, so extension, retracement, extension, retracement, extension, retracement, extension, right? We learned about this. Everybody, please don't analyze on MT4. Please do yourself. I'm not talking about you, Akos, I'm talking about everybody else. A lot of you are analyzing charts on the MT4. Don't do this, everybody. Make a favor to yourself and analyze on maybe Forex. It's a great tool. You have different charting platforms. Okay, so, and we learned that how we define market structure is we are monitoring and following the short-term trend, right? And how do we know that the trend has shifted? Well, we are going to see a change in the short-term trend. Okay, now, and the market, this is a concept that we learned, the market is waving up and down. In this example, after the extension, it must make a retracement. It's a must. It's a must. So now, should we go long or should we go short? Well, long term we should go short, but short term maybe maybe the market is making higher highs, higher lows, and it's making a retracement, right? And maybe it's going to make a retracement, we needn't learn yet, but maybe it's going to make a retracement until this level of past resistance. Okay, maybe, I don't know, it's a prediction, but it must make some kind of a retracement, everybody. Why is that? Because it needs to wave. It cannot wave otherwise. Okay, after the extension it must happen 100%. It must happen some kind of a retracement, and after the retracement is over, it must happen the final, right, extension. There are several pairs where mistake on the bands comes from the lack of data. Yes, Miguel. Yes, you need to check the TradingView or NinjaTrader or Saxo Trader or whatever charting platform and compare with JForex. Okay. So long-term bias down, short-term bias we're going to see on the short-term, on the other time frames. Okay, so that's it for the, what else can we do? Well, we learned about trend lines, you know, and we are in a downtrend, we have a downtrend line, and that's it for AUD USD. Now let's go on the weekly chart. Weekly chart, let's compress the chart, and again we have the upper band somewhere in here, and we have the lower band somewhere in at 479, right? 479. Then we need to draw structure, and remember, every currency pair has its own structure and its own short-term trend. So extension, retracement, extension, retracement, could be extension, retracement, extension, retracement, extension. Okay, so let's check the short-term trade, the short-term trend, short-term trend. Well, the market is moving up, but we don't have the two minimum, two highs and two lows where the second high and the second low are higher high, higher low, do we? Rising now a bit, yes sir. So long term still we are down, long term bias is short, maybe short term, right, maybe short term, maybe we are up, but not on the weekly. So, and what else, everybody? We don't have a trading opportunity. We don't have a trading opportunity on the weekly, and we don't have a trading opportunity on the monthly. Yes, in the later lessons we are going to learn support, resistance, candlestick formations, and so on and so on. But today we're bringing all together the first part. Okay, so let's go on the daily chart. Daily chart. Let's compress the chart. Compress, compress, compress. And as you can see, everybody, structure on the daily is going to be different than the weekly. And you don't need to go back in time in the history too much. You just need to be clear what is structure and how can you define the structure. Well, structure on the daily was this: extension, let me check which one is the lower low, and we're going to use the widget here. So this low is 0.714 and this is 0.719. okay, so we still have a lower low. Weekly could be just another lower high in the downtrend, yes, So this is structure, extension, retracement, extension, everybody. Okay, and we learned this. Passion, why not this high? This high is a lower high. It must be a higher high. Okay, so this is the next extension, and the next retracement, and the next extension. And this extension, the last one, it's the last, it's a starting point. So this is the retracement, right? And let me see if this is a higher high. Yes, it's a higher high. This is the last extension, just for a few pips. It's a higher high. And okay, everybody. Passion, how do you know? Well, we learned about this. You can see the short-term trend making higher highs, higher lows, higher highs, higher lows, and then making lower lows, lower highs, lower lows, lower highs, right? And then here in between, you need to learn the concepts, everybody. So you have, of course, short-term higher highs, then you have short-term lower lows, lower highs, and back higher highs, higher lows, and again lower lows, lower highs, and again higher highs, higher lows, higher highs, higher lows. Okay? You need to train this. Okay? And you need to learn the rules. Extension, by the rules, it must be bigger or longer or higher than the retracement. Okay? And then the market change structure. So we were in an up structure, now we have a down structure, and as you can see, everybody, so where is the market making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then reverse a little bit, making higher highs, higher lows, higher highs, higher lows, right? So not to make it too complicated, well, this would be the extension, this would be the retracement, this would be the extension, this would be the retracement, and the next extension, because it must be a lower low, is this one. Okay, and let's color code this in red. Okay, so we have a down structure on the daily, and what do we have here? Do we have a confirmed retracement, everybody? Question for you, bringing all together lesson 14. Do we have a confirmed retracement on the daily? Do we have a confirmed retracement? You can say yes, you can say no, you can say I don't know. Do we have a confirmed retracement? Right? Short-term trend. Is the market making lower lows, lower highs, or is the market making higher highs, higher lows? Yes, we have. Okay. Bringing all together. What can we do? We have two options. Or we can short the market when and if happens the counter trend line break, or we can go long when the next counter trend line break happens. So we can do both. We can go short or we can go long. It's up to us, everybody. Okay? Now, bringing all together, remember we talked yesterday, if the market is going to break the uptrend line, you need to check what? If you are going to short the market from the daily chart, it doesn't matter. Short or long, it doesn't really matter. What do we need to do, everybody? Maybe the market is going to break the uptrend line. maybe it's going to break the counter trend line. Okay, so let's color code this in green because we want to go up. We want to buy the market, and this is going to be green, or maybe the market is going to break the uptrend line. Time to shine, yes sir, we need, before we enter the market, before we enter the trade, everybody, on the AUD USD daily chart, we need to check the confirmation time frame. So from the daily chart, if the market is going to break the uptrend line, but you are going to have a bullish candle on the weekly, and this is tricky, as Miguel is saying many times, it's tricky, and this is tricky. Why is that? Because the candle is, this weekly candle is still forming, but you can relate to the candle before, right? So even if the market crosses the uptrend line, and we can draw one more here, right? This would be the uptrend line, okay? And this could be a tricky entry, and there is no right or wrong. We need to check the weekly chart first. And why is that? Well, because the market is making higher highs, higher lows, and sometimes the market is going to break the uptrend line just to come to the level of past support that we're going to learn in the future lessons. Okay, we have past support here, okay, and start to move back up again. Okay, so don't just short because you see the uptrend line break, check the higher time frame. Okay, now what if the market breaks the counter trend line, the green one? Should we check the higher time frame again? You know, the market's going to do one or two things, right? Or it's going to break the uptrend line, or it's going to break the counter trend line, the green one. So if the market breaks the counter trend line, the green one, right? Should we check the higher time frame? Yes. Yes, of course. Right? Now, everybody, let's make a poll, right? Who in here wants to wait for the uptrend line break and go short? And who in here wants to wait for the counter trend line break and go long? And don't be shy, everybody, there is no right or wrong. You can do both. You can go up and you can go down, okay? But yesterday we talked about time, right? Always check the confirmation time frame, yes sir. And we said also that if you want to make money, right, and be a professional trader and a hedge fund trader and an investment bank trader, the same way we are taking opportunity of the long-term trades, we should learn how to take opportunity on the short-term trades. Any long, thank you Annie. So let's make a poll, everybody. Who wants to go long, who wants to go short? And then remember, we are going to check the 2-hour chart. I wait for the... Miguel, do you want to go long or short? Maybe you can go on a... Yes, we are going time to shine. We are going to check the 2-hour also. But we need to understand first what is going to be our plan. We are making a plan on the daily chart. So, bringing all together, we analyze the monthly chart, we establish that the long-term bias is still down, and we establish that the market made an extension, and maybe we don't have a confirmed retracement yet, but maybe short-term the market is going to retrace. Done. Then we went to the weekly chart and we confirmed the same thing. We said, well, we are in a down structure, the market just finished, closed the candle, a low, so maybe closed an extension, and maybe we don't have a confirmed retracement yet, but maybe on the smaller time frame the market is making a retracement already, but the long-term bias is still down. This was the weekly chart, and now time to shine, we come to the daily. And we analyze the chart and we discovered what? We have a down structure on the daily. This is important. Why? Because the retracement on the weekly and on the monthly can break structure on the daily. And why is this important? It's important because of the probability game. Okay, for the time being we have a down structure, okay, but the short-term trend is up, so we are in a confirmed retracement on the daily, and because the long-term bias is down and the short-term bias is up, you can trade both sides. Miguel, time to shine. Giuseppe, long. Akko says long. Eddington, short. Santano, if the daily comes at support and weekly has a bullish candle, I will go long. Time to shine. Long countered am based on the last weekly bullish candlestick. Salbakti long because the weekly is still in short-term uptrend. Salbakti, you don't have a confirmed uptrend yet. You need to be careful there. Wait for the... Miguel says long. Question, if the uptrend are retracement, then we would go... if the uptrend is a retracement... the answer is no, Miguel. No. Don't go short on the retracement. Victor says short, okay. Miguel, don't go short on the retracement. This is a risky trade. Go short long term if you want, but don't go short term. Okay? If you are skilled enough, well, okay, but for the beginner traders, everybody. Okay, so now we are going to go on the 2-hour chart and do the same thing. We're going to compress the chart, right? And here is where beginner traders make a mistake. Oh, we have an up structure. We have an up structure on the 2-hour chart. And the answer is, well, maybe yes, maybe not. So you need to go back in time, everybody, and confirm if the market did break the previous down structure. You cannot just falsely assume, everybody. Okay? Passion, but we have higher highs and higher lows and lower highs, right? And we have structure high, structure low. Yes, all of this is true, but if this is a down structure and you have something like this, right? It appears that it's an up structure, but you need to, and let's do it differently. So you need to check, double check, triple check, everybody, because what appears, I don't know, I'm not saying it's not, I'm just saying that I don't know. So what appears an up structure, maybe it's not. You need to confirm before you say, oh, we have an up structure on the 2-hour chart, because we are seeing, right, the short-term trend making higher highs, higher lows, and then moving to the lower lows, lower highs, and going back up again. You need to check, double check, triple check the previous structure, because maybe what appears structure is just a retracement. So we are going to compress the chart, and try to understand what was happening. Okay, I'm moving my chart left and right, and I cannot understand and see clearly. My perception is not good enough to clearly see what was happening. So I'm going to, this is a trick, we learned this, we are going to move on the higher time frame, the 4-hour chart, and compress the chart again, compress the chart, right, and move it around left and maybe right. So it's a little bit better, but still, let me see, I could assume that this was a down structure, extension, retracement, extension, retracement, extension, extension, retracement. I can assume this, extension, retracement, extension, retracement, extension. Okay, it's not totally clear to me, but I'm going to assume that it's this one and this one. Okay, and I'm going to double check it. I'm going to move one time frame back, so I'm going to jump from the 4-hour chart to the 8-hour chart. And now that I'm on the 8-hour chart, I'm trying to figure out if this higher highs, higher lows, lower highs, higher highs, higher lows, lower highs, down, up, down. Okay, so what would you say, everybody? Do we have an up structure yet on the 2-hour chart? So the important high is this one. This is the important high, right? Now look at this. We don't have lower lows, lower highs, lower lows, lower highs on the 8-hour chart, do we? But if we jump back on the 2-hour chart and compress, then we have the short-term trend, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, and we are here right now. So what can we conclude? No, just look at retracing, yes. Okay, so again, we have a down structure on the AUD/USD 2-hour chart, and we have an up, we are in a down retracement, so the market is moving up, right? It's making higher highs, higher lows. Okay, what does this mean? Can we go long, can we go short? Yes, we can do both, right? So we are going to change this. We're going to delete this one and delete this one, delete this one, delete this one, and we are going to draw an uptrend line, something like this, right? And now we are going to draw a counter trend line, something like this. Okay, and we are going to draw the short-term trend again, so low to high, high to low, low to high. Okay, and we are here right now. Why is this important? This is important because of the take profit levels and the stop loss levels. Okay, how we are going to trade this? Well, we are going to trade this, and we are here right now, 2-hour chart. And from the 2-hour chart, we are going to identify the short-term trend. So, short-term trend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This was the short-term trend. And then it's making lower lows, lower highs, lower lows. And this is the short term right now. And let's color code this in red, and we are going to color code this in violet, something like this. Okay. Now, for the traders that want to go long, what we're going to do? We are going to wait for what? We are going to wait for the change of the short-term trend. We are going to wait for the market to show us, and we learned this, minimum 2 highs and 2 lows, where the second high and the second low is going to be a higher high and a higher low. Do we have this pattern vocabulary for the beginner trader? Do we have this pattern now in the market? Can we go long right now, everybody? Do we have the confirmed uptrend, short-term uptrend on the 2-hour chart? What do you think? So if the daily trend lines break short, we'll have a better probability. Yes and no, Santano. It depends on what time frame are you going to enter. Okay. Wait for 2 highs, 2 lows. Time no, not yet no. All of you are right. So we are going to wait. Okay. Santano and everybody else, I know it's complex. It's complex, but try to understand this. Question: if you are going to, now here is the probability game, right? If we are going to enter from the 2-hour chart, what trade is less risky short term? Okay, now this is the question. What trade is less risky short term from the 2-hour chart? Don't confuse the charts, everybody. Not all entries are equal. And what trade is less risky long term from the 2-hour chart? Not from the daily, not from the weekly, not from the monthly, but from the 2-hour chart. Let's make a poll, everybody. Question number 1 first. What trade is less risky short term? Is less risky to go long, or is less risky to go short? What do you think? Giuseppe says short is less risky. Short on 2 hours. Short. Okay. Next question, everybody. How can you confirm / identify how can you confirm or identify what trade is less risky from the 2-hour chart? Everybody is saying short. Okay. How can you confirm that the short trade is less risky from the 2-hour chart? Salbakti says long. Akos long. Long is less risky short term, and short is less risky long term. Short term short, long term long. Okay, everybody. How can you, let's say that all of you are right, okay? I'm not going to give you the answer. How can we identify or confirm if a long trade is less risky or the short trade is less risky? from the 2-hour chart. And this is a chart, okay, less risky, and we are going, I'm going to rephrase the question, we are going to enter from the 2-hour chart. I'm going to rephrase the question, okay? How can we confirm or identify what trade is less risky? And we are going to enter from the 2-hour chart. Because we are still making lower lows and lower highs. This is not the answer. Lower lows nor highs, no. Structure, no. You need to learn this, everybody. I know, okay, I can give you credit, everybody. It's a lot of informations. We are in the lesson number 14. It's a lot of information. I can give you credit, but on the other side, I can tell you, well, you didn't pay attention, everybody. According to the stop loss level, no. Present high, no. Giuseppe, yes, sir. That's it, everybody. How can you confirm what trade is less risky? Do you want to go short from the 2-hour chart? Well, the 2-hour chart is your trading time frame. So you need to go on the daily. If you go short on the daily right now, are you going against the short-term trend? Or are you going with the short-term trend? I'm laughing because on the other platform somebody wrote, aha! Now I understand. I hope you do, everybody. Before you enter short, or if you are going to enter short term, are you going against the short-term trend on the daily, or are you going with the short-term trend on the daily? Structural 2-hour trend, no. So everybody, is the short trade less risky or more risky short term? From the 2-hour chart. Victor, you said yesterday, oh, I got it. Everybody, yes, you made us a pitfall. Oh, I got it. Now I understand. I can give you credit, everybody. There is a lot of information to grasp. Please go back. I know it's boring. Watch the webinars over and over and over again. All of them. More risky. Yes, sir. So the one who said, let's go short. Do you still want to go short right now? The market is making lower lows, lower highs on the 2-hour chart. Do you want to go short right now? Everybody? You can say yes, you can say no, you can say I don't know. In the end, you are going to do what you want to do, right? After the webinar, you are all alone with your platform. And you can follow the rules or you can break the rules. A short on the short term is more risky. Yes, sir. I want to see somebody said, oh, I got it. Everybody, you know what is ego? Ego is when you don't accept you were wrong. So be honest with yourself and type, oh, I was wrong. I got it now. I understand. You know, I was wrong for 5 years, burning money, losing accounts, borrowing money, you know, and one day I looked into the mirror and I said, I'm a stupid idiot, I'm a moron. And then things start to change. Patak, it doesn't matter if it breaks the trend line, it's still making higher highs, higher lows. So the market can break the uptrend line on the daily, but it doesn't change the fact that it's making higher highs, higher lows. So you would still go against the trend. Come on, everyone who said short was less risky. Yeah, no problem. Everybody, we are here to learn, okay? It's not, oh, FXPassion is the boss and the man, you know, and the super intelligent. We are here to learn and to talk. And there is no right or wrong, so don't be shy. Okay? Passion won't move until you admit. No, I'm going to move. I passed that. No problem. But I'm really curious if it's clear. This is what is bothering me, everybody. For those who said that shorting the market is less risky, do you understand? Is it clear to you what is more risky to short the market? No, I don't care. I don't care if you say, oh, I was wrong. I don't, you know. It's not about this. Clear? Okay, everybody. Clear. Okay, so let's go back and... Okay, now, other question. What trade is less risky long term? What trade is less risky long term? And you already know that we are going to confirm the long trade from the 2-hour chart. Right? And going long, or you go long right now, or going long, you can go long because we have a counter trendline break, yellow. Okay, we have a counter trendline break on the yellow trendline, so you can go long. Now you can do two things, everybody. You can wait for the pattern of making higher highs, higher lows, you know, or you can enter long right now from the daily, doesn't matter. But what trade is less risky long term, the long trade or the short trade? Sir, what if it makes 2 highs and 2 lows but doesn't pass the previous high? We still safe to go long on a 2-hour time frame, or is it safer to wait till happens is broken? Answer: you can go long because you are going to go with the short-term trend on the daily, but of course you are going to have a higher probability time to shine if you wait for the market to break the higher high on the 2-hour chart. Okay? Yes, you're right, Master Passion. No, it's not about me, don't worry. I'm not falling for a master thing, you know. I'm here to help you understand, that's it all. Okay? I'm not here to pump myself, you know, oh, I'm the best and, you know. Okay? My job is to help you. But I'm telling you, some of us, we have an ego problem. And we have difficulties to admit that we are wrong. And when we trade or demo trade, and this is psychology, we don't accept our losers, and we are waiting for the market to stop us out, and we are taking small profits because we don't allow ourselves to be wrong. So this is a psychology part that is very important. Santano, now I got it. Yes, sir. Eddington is answering: short is less risky long term as structure on the daily is down and short term uptrend on the daily is still just a retracement of that structure. Great answer. Short long term as we are in a retracement based on the okay. Great. Now I'm going to challenge you a little bit, everybody. I'm going to challenge you. Eddington, I was wrong once, I thought was wrong. I was wrong thinking that I was wrong, you know. Okay, I'm going to challenge you, everybody. What if you have the same example, but the market broke structure on the 2-hour chart, so you have a confirmed up structure? What trade is less risky? Still the second question. Eddington gave a great answer. Time to Shine gave a great answer. What if the market breaks structure on the 2-hour chart? What then? You can say long term is less risky, you can say short term is less risky. And we are going to end this webinar today, everybody, like this. Remember, this is the monthly structure, okay? And this is where the trading is challenging until you get it. So remember then, this is the monthly, and this could be also the weekly. Let's color code this in yellow. But the daily may be like this, and let's color code this in red. And the 2-hour chart, the 4-hour chart, you know, maybe like this. And let's color code this in yellow. This is what is challenging until you get this. I'm going to delete this one, delete, and we're going to finish today the webinar. So you are watching at the same chart, right? But you want to trade, you want to enter from the yellow, which is the 2-hour chart, the 4-hour chart, the 1-hour chart. Okay, now this is what is challenging when you think about improbabilities. What is less risky, what is more risky? If the 2-hour time frame, the yellow one, is going to break structure, okay, and to complicate things, you have this on the daily also, right? And this is what is challenging. So the yellow, the 2-hour chart just broke structure. You have an up structure. What is short term is easy to understand. What is less risky long term? Everybody, you need to understand what is less risky long term. And what should you trade? Short term and long term. So you have the market broke the down structure, it's making higher highs, higher lows, right? What does this mean? This means that you can trade the 2-hour chart up, right? Why is that? Well, because the daily chart can retrace until up in here, right? It's a probability game. It can retrace further. It should not break the down structure, right? Okay, it should retrace until up in here. It should not break the down structure. But what if it breaks the down structure and those two suckers on the left are still down? And this is what is challenging, because there is no one answer to give you. This is where you need to monitor the market and play around with probability. So, Passion, can we go long? Can we go long? Yes, you can. Can we go short? Well, it depends on what time frame, you know, because when the market starts to break structure, maybe not on the 2 hours, but when it breaks structure on the daily, what was less risky can become more risky, and vice versa. Okay, this is what you need to pay attention. Okay, what was less risky can become more risky, and vice versa. Okay, everybody, our time is up. See you back tomorrow. Watch these webinars over and over and over again. Stay strong and trade with passion. This is FXPassion signing off.